We are live, you guys, on YouTube. And thanks again for coming out here and sharing your Monday morning with me. Um, like I said, we're going to be going over some VA loans. If you guys have any questions while I'm chatting, please don't hesitate to just stop me. I'm here to help you guys out however I can with any and answer any questions for you. So, VA loans, y'all. What are they, right? They're really meant for our veteran clients. We're here to help them out, especially here in San Diego. I don't know if you guys knew, but we have almost 200,000 veterans here in San Diego alone. It's a huge population. And a lot of homes that are constantly being bought and sold by our veterans. And it's actually one of the easiest loans for us to do. So unfortunately, we do have some myths out there that VA loans are scary, but that's only because people don't understand the ins and outs of these loans. There's actually a lot of advantages to them, especially when you're a listing agent to take them on. And we'll go through that as we move along through the presentation. So um, we are a military owned family. Like both of our owners have military throughout their families, throughout their blood. So the one way that they've been giving back really is by focusing on the military and providing the top-notch service to them. We can close VA loans in as quickly as 2 weeks, which is pretty awesome. So we are the number 8 VA lender in the country, y'all, which is pretty sweet. We focus on it across the country. We have very streamlined processes for VA loans. We have direct connections because we're a direct lender right with the Veterans Administration. So we're able to log in and pull up their certificates of eligibility. I'll show you guys what one looks like and really get all their information dialed in well in advance. We can underwrite their loans in advance. And especially someone that's active duty, their loans are so easy to do, you guys. We need one pay stub from them because it covers an entire month. We need 2 bank statements and an ID and maybe a W-2. So like 4 documents are so easy to get, and we can get somebody pre-approved right off the bat. Very, very simple loans, very quickly to get them approved and to understand the intricacies of them. And they're very, very flexible loans. So they are government loans, you guys. So just so you understand, they are backed by the Veterans Administration, and basically they are guaranteed loans. And what does that mean? And I mean, there's going to be information on the screen, but I'm not going to read it to you guys. I'm just going to talk to you guys about this. So what does it mean, right? Look, at the end of the day, the VA guarantees that loan will be paid to the lender. So if a veteran was to default on that loan, for instance, they will get that money back. The lender will get paid. So when they go out and lend them the money, they know that it's guaranteed. They have a lot less risk involved, right? So if you have less risk, what does that mean? Their interest rates are lower because interest rates are a direct reflection on the level of risk that a bank is going to take in lending you hundreds of thousands of dollars, right? So when you take a look and run the numbers on a VA loan compared to a conventional loan, you're anywhere from 1/4 to 0.5% less typically on a VA loan. Obviously, it's going to depend on credit. Okay. So if you have poor credit, it's gonna impact your eligibility. It's gonna impact your interest rates, right? Which is gonna lower how much we can lend you. But if you have decent credit, you're gonna be neck and neck. If you compare it to a conventional loan, it's gonna be a lot less expensive from an interest rate standpoint. Um, so moving on, what are the VA loans? Like I mentioned, they're government backed, right? They're guaranteed by the VA. They're available for reservists. So if you're in the National Reserve, you do have to have a set amount of hours that you've already done with and provide us documentation on those hours. but also active duty veterans and retirees, folks that are out of the military. They have their VA eligibility, and a lot of these folks don't understand what the benefit is of 100% financing, right? They just don't know. You don't need to put a down payment down, although you can. You don't need to, unless sometimes you might need to on your second home. Like if you can use your VA twice, by the way, you guys, right? So if you have an existing home already that you've used for and used your VA to buy that home, you might have some eligibility left to purchase a second home. And I'll show you kind of how we calculate those numbers in a little bit. But it's 100% financing on your first home. If you don't have another VA loan, it's 100% financing. And we can go up to $2.5 million on a VA loan, 100% financing. Obviously, you need to qualify for those monthly payments, right? And your debt to income levels have to substantiate that. And so with us, we have a 580 minimum credit score, you guys. I mean, to qualify for a VA loan, if you're going to be in the high balance arena, and you guys do remember what that high balance arena means, right? Anything over in San Diego, 2024, $766,550, right? We're going to be up over that. That's a high balance. So between that number and $2.5 million, you do need a higher credit score. You have to have a 680 in order to qualify for those larger loan amounts. But typically anyone purchasing that kind of house should probably, that kind of mortgage should probably have a higher loan amount to begin with. But anything underneath there, 580, you guys, 580, that's it. 100% financing is pretty awesome. But it is less restrictive terms, because look at, with the conventional loan, you need a 620, right, to go out there and get a loan, and the mortgage insurance is astronomical. And that's one of the benefits of going with a VA loan, right? So there is no down payment, right? You have flexible credit. Again, 580, 620, right? I mean, it's definitely a lot less. You've got more competitive interest rates, like I mentioned, because we are backed by the government, right? And these loans are guaranteed. They're substantially less. You've got no mortgage insurance, right? That's another huge benefit. Now, one of the things that you do have, I'm going to take a break from the positive things. One of the things that you do have is called a VA funding fee. Okay. And what is a VA funding fee? It is the way that the government is able to guarantee all these loans. So basically, if you're active duty, you have to pay upfront, kind of like, you know how the FHA also charges like the upfront mortgage insurance? The VA does the same thing, right? They call it a funding fee. So if you're taking out your first home, you never bought a home before, right? And you don't put any money down, 2.15% of whatever that whatever that loan amount is, okay, is going to be tacked on to the loan amount. You don't have to pay for it in cash. It gets financed, but it is money that gets financed. So it will take you a little bit longer to get into the break-even standpoint, right? So if you're buying a house now, you might not even get down to the point of where you owe as much on the house next year as you purchase it for, because of that VA funding fee, right? So we have to keep these things in mind. And we always go over this with our veterans to make sure that they understand exactly what that means. But that VA funding fee, it all gets pulled together into a huge bank account in the United States. And if anybody ever defaults on a loan, the Veterans Administration, they dip into that bank account and they pay the lender. And that's how that they are able to guarantee that loan. All right. So one of the other benefits, though, right, is that these loans are assumable. And I think you guys have heard me say this over and over and over again. If you have a listing coming up and that's a veteran that's in that house, they can let anybody else assume that loan. And they don't necessarily have to assume it for they're going to get the interest rate that's on the loan, right? A lot of these veterans are sitting on 2-3% interest rates. So you have a huge advantage when you're, advertising something like that. You can even negotiate, and I'm talking about this with one of my clients, you can even negotiate a higher purchase price based off of that lower interest rate, because that benefit is huge at the end of the day, right? We did a comparison a couple weeks back, and you could see that if someone took out that a VA loan at 800,000 today, I mean, it was upwards of like six, almost $7,000. Whereas it was like 3%, you're talking about half that. I mean, the monthly payment difference is astronomical, and it's significantly beneficial. And so why give that away to somebody? Why not be able to capture some of that in a higher purchase price, right? And that's something that you guys might be able to negotiate when you're talking to the listing agent, to the buyer's agent, right? So assumable loans, anybody can assume it, you guys. It doesn't have to be another veteran. Now, mind you, one of our agents wound up bringing up a really good question, and he's like, "What kind of liabilities are you looking at if you let somebody else assume your loan?" And that's a great question. So one of the issues that you have to keep in mind is that eligibility, right, that you used for that VA loan doesn't get wiped clean when you wind up letting somebody else assume it. So it's still being held against you, and you only have X amount of eligibility, and we'll go over eligibility here in a minute. But you only have X amount of eligibility, right, in order to purchase your next home. So if you weren't thinking about using that VA loan again, or you have money for a down payment after you sell this home and you're going to just use a conventional loan anyways, it's a great option. And also keep in mind that if somebody that you let assume that loan forecloses or short sales on that loan, it will show up not on your credit, but on your certificate of eligibility. And so once that happens, you definitely will not be able to use that VA loan again. You would need to clear that out with the VA in order to be able to ever use a VA loan again. So it is something that if you're younger and you're thinking about using it maybe down the road sometime, that might not be the best option. So, I'm just going to be real straightforward and make sure that we cover all of our bases. Here's the positive, here's the negative. Yes, you might be able to make more money selling the house if you let somebody assume it, but at the same token, you are kind of incurring some liability, not on your credit or anything like that, but it will be held against you on the certificate of eligibility. And I'll show you guys that in a sec. So the closing costs are limited, y'all. If the veteran is charged by the lender a 1% origination fee, there cannot be any other fees involved. So keep an eye out for that. That's something that Navy Fed is infamous for. As a matter of fact, it's kind of quoted on every single one of their interest rates that they quote online when you see those. So if they wind up charging a 1% origination fee, that buyer is not allowed to pay title fees, escrow fees, appraisal, notary, anything, nothing, no inspect, nothing, right? So just be careful of who you're working with. We do not charge origination fees, but there are some banks out there that will. So just a heads up. And then also, you guys, you got a built-in appraisal protection. Like there is no other loan out there with a Tidewater Act, right? And if you haven't ever heard of the Tidewater Act, what it does is, if for whatever reason that appraiser goes out there and runs the comps and is about to provide you with an appraisal report that's under what the purchase price is, they're required 3 days prior to handing over that report to give you notice that, hey, this report is going to come in short. Like this is not going to appraise at what you're purchasing it for. You need to provide me with some sort of comps that are going to help me in determining that value. And that's a huge benefit, right? Think about it. You don't get blindsided with a VA loan. Like, it's coming. If you're going to come in short on an appraisal, they're going to give you a heads up. You don't get that anywhere else. You don't get that with FHA, with conventional, jumbos, non-QMs, nobody. You just get a report. Oh yeah, hey, guess what? You're $50,000 short on that appraisal. Figure it out, right? We can get creative with other loan types. If we have some money, we can move money around. But in this particular case, at least we know in advance and we can do something about it. We can reach out. You guys you're the first ones I call. Like, hey, we're coming in short. What do we want to do? Do you want to fight it with the agent, or do you want to provide the appraiser with some comps that we want to use in order to get this through? Questions, you guys? I know I'm kind of flying through a whole bunch of information, y'all. But if anybody has any questions, please don't hesitate to stop and ask. Is all this making sense so far? Thumbs up, yeah? All right, cool. I can't see the chat, so Matt, you, you can let me know. All right, y'all. So look at some of the safest loans out there, like I mentioned. And again, and they're some of the lowest foreclosure rates because veterans have literally they're held to a higher standard. They can't just go foreclosing on their properties, like especially if they're active duty, right? They're gonna get in trouble, so they don't. Some of them, when they get out, different story. But on average, they're no slower to close than any conventional loans out there, y'all. So if we're closing conventional loans in 10 days, we can do a VA loan in 2 weeks, 14, 15, 16 days. I mean, the only thing that might help us up is that appraisal, because that appraisal, they have 14 days to get it back to us, but it usually doesn't take them that long. So you can use a VA loan for new construction, and you can use it for a fixer-upper. There are a lot of intricacies with those loans. We're not going to get into renovation and construction loans in this class, but we can use them for them. So if you need more information, feel free to reach out and I can provide that for you. And also, if a veteran has passed away, their surviving spouse can still use their loan. So it is an amazing benefit and that very well deserved. So some of the outlines of this product, so you guys understand what we're looking at. Usually 30 years is what we see on a traditional basis. Sometimes we can go 15, but rarely do we ever see 15. But you can also do a 5-year ARM. I don't know why you would, but you can. Minimum cash investment, you do have closing costs. So look there's a difference between down payment and closing costs, right? Like, so don't go telling people that, hey, you don't have to come up with any money, because you do, right? You have to come up with some sort of earnest money deposit. You're going to have to pay for an appraisal, and you're going to have to pay for some sort of inspections, probably with the house. And then you will have closing costs. Now, we can handle those closing costs in different ways. We can negotiate them in, right, to the contract. So if you call me up and be like, hey, Eddie, how far can they go with this pre-approval? And, well above and beyond what the offer price is, you can always offer a little bit more and then ask for a credit back. Okay. So that is one of the easiest ways to do it. You can always give them some of your commission, or I can give them some of mine. I'm just kidding. Just a joke. But what you can do is lenders can actually give them some money and they can cover the closing costs. But understand that if you ever see a lender saying, hey, we'll credit you your closing costs, there's nothing in life for free, right? There's no free money out there. They're going to raise the interest rate and they're going to give them a lender credit based off of the points that are available under that rate. Okay. So they'll give it a higher rate and they'll give them that interest up front, and that'll help cover the cost. So there are options. All right. Let's see. Premium pricing. Like I said, they can borrow again. That's really what I was referring to. Premium pricing and discount points. You guys have heard of paying points up front, right? And those are called discount points in our world. So, and basically, essentially what you're doing, you're paying interest up front, right, for a lower rate during the term of the loan. Make sense? So that's how you're buying down the rate. Air quotes, right? Buying it down, paying points, all this used interchangeably, but that's how it works. The inverse is also true. So where you pay the bank for lower rates, the bank will pay you for taking a higher rate. And that's called premium pricing. Make sense? And every day is a little bit different because the prices and the rates change. And some days you get more money for certain rates, some days you get less. But that's how a banker is going to go out there and say, hey, we'll cover all your lender fees. Yeah, you'll cover them all right. You're going to fix them into the financing. So just be mindful when you see that. But it is an option if we have someone strapped for cash. Again, maximum cash out restrictions. There really is no limit to a certain degree. We do have certain restrictions on these loans depending on how big they are. They're internal limits, not necessarily full limits. So you can use these loans to buy 1 to 4 family homes. And that's a traditional house hack that you might hear out there, right? A lot of veterans will go out there. I've got several clients that have gone out there and bought multifamily homes. You have to live in them. They're all owner occupied, just like FHA loans. You can't be using a VA loan for an investment property or a second home. You have to live in there full time. So again, it's one of those things where, hey, I can buy a house with an ADU. I can buy a 4-family house. I can live in one of them. I can rent out the other ones. And you don't have the same net tangible rule that you do with FHA that you do with VA. So with FHA, if you buy a 3 or 4 family, here's a little tip, right? You're going to need the other rents to cover the entire mortgage, the 3 or 4 family. It's called a net tangible rule. You don't have that with a VA, which is sweet, right? And those properties are fantastic. If someone can buy an investment property, think about it, while they're stationed here in San Diego, and then they wind up getting stationed elsewhere, or they wind up like leaving the military and going out, and they have an investment property that with 100% financing, use all the bank's money to generate this income for you. That's huge. That's enormous. That's such a benefit. I don't know why you wouldn't investigate it, right? At least look into it and see if you can qualify for it. 30-year FICO, you gotta have a 580. With a maximum loan amount of 2.5 million. Now, mind you, like I said earlier, anything over that 766, 550 into the high balance arena, there are some caveats. 2.5 million is the max that we will go up to, and 680 is a score that you need to get into that arena. And if you want to do a 15-year, you just need a 640. And it's a max of 1.5 million. So mind you, not everybody is eligible for a VA loan. If you're a veteran, if you were dishonorably discharged, you don't get a VA loan. You probably don't deserve it. If you got dishonorably discharged, you must have really screwed up somehow in the military. But if you were not, these are the folks that all get veteran VA loans. Army, Navy, Air Force, Marine Corps, and the National Guard. For some reason, I still haven't figured out why the Coast Guard isn't on this list, because God knows they protect us just as much as, and quite a bit more than a lot of these other peeps do, but they're not yet. Hopefully we'll see that change. And they'll add the Coast Guard to it, because they are definitely part of our armed forces. I mean, they're out there protecting us every day. So in order to be eligible for it, you have to have served at least 90 days during wartime, or 180 days without. So you can't just get in like the next day, try to buy a house with a VA loan. You have to have served some time, and it's really not a whole heck of a lot of time. I mean, 6 months. But that's those are some of the eligibility. There are some special circumstances, and depending when you got into the VA will determine how long you had to stay in there for. Some of the folks that have gotten in there a long time ago, they don't have the same criteria that we do when after 1980. But some do. So those are little caveats that we pay attention to. You guys don't need to worry about that. But there are certain circumstances where the eligibility is a little bit different than the 180 days and the 90 days. So getting your certificate of eligibility is really easy. Once you fill out an application with us, we have direct access to the VA website. We log in, we pull up the VA eligibility, and this is what it looks like. So it'll tell us where they're in and whether they're exempt or not from the funding fee. And then it'll tell us if they have any kind of outstanding loans with the VA. And why does that matter? Well, because earlier, you guys, I had mentioned to you that you can use your VA, right, for more than one purchase. So say, for instance, we have our friend Joe here, who has taken out a loan for $347,820 a couple years back, bought himself a condo, wants to buy a house, right? we can figure out how much they'll qualify for with this convoluted math equation that the VA put up. It's not that simple to figure it out. Be like, oh, hey, you can use $1 million and you use 350, so you're left with 650. It doesn't work that way, of course. This is the government. Let's make things as complicated as possible, right? So we have to put in the sales price in here. And we also have to put in exactly how much that they've used from their eligibility. See this entitlement charge? That's the number that we put in, which makes no sense why they're doing that. Rob, are we twinning today? Maybe. Oh, sorry for the little sports break. All right. So we have to throw in this entitlement charged. Okay. So I was able to play with these numbers a little bit beforehand, and I figured out that this person can still buy a $650,000 home, and it just so happens it adds up to $1 million. Please forgive me. I didn't mean to use that as an example earlier. But for instance, we want to find an $800,000 home, right? For the same person, and we put in the 800,000. They've already used almost 87,000 of their guarantee already, of their entitlement. So now we would be eligible for a $764,000 loan. We need to come up with a $35,000 down payment. So you can still use it a second time. There just will be a calculation as to how much you're eligible for, how much down payment you're going to need in order to make that happen. Cool,
Yeah,
you guys?
a big part of this equation is what state and county you're in as well. San Diego is going to be a lot different than Modesto. So keep that in mind as well. This equation definitely breaks down the limits and where in space and time we're at. So
True story. That's why we're clicking on these. That's why it's using, today's loan limits in San Diego County. If I was to choose a different one, these numbers would all change. So good point, Matt. Thank you for bringing that up. So just a little sidebar, that's how it works. So if you guys are like, oh yeah, hey, he bought a $400,000 home, how much eligibility he has left? I can't answer that question. No lender can without having all these specifics in there and running their certificate of eligibility. And that's only done once we get an application. What up, Sam? Did you have a question, buddy?
No, not yet.
Okay, cool. All right, moving right along. So that's the certificate of eligibility I wanted to show you guys. That's what it looks like. And like I said, we're able to pull that right from the VA website. Super simple. We just need an application and legal permission to go grab it. So moving right along. How does it compare to the other two popular loans, right? Conventional loan minimum. I should probably change that. Whoop, nope, nah, stop. I should probably change that. Minimum is 3% now on a conventional loan. Sorry, I missed that. And it's 3.5% on an FHA loan. So I will be updating my slide, but I can't do it right now. So it's 0% down payment for a VA loan, 3% for a conventional loan, up to the conforming loan limit. If you go over the conforming loan limit, that's where 5% kicks in. If you go into the high balance arena from $766,550 to $1,006,200, you're going to need 5% at that high balance area and 3.5% for the FHA. There is no mortgage insurance, y'all, with the VA loan. If you don't put 20% down, you are going to be required to put to have PMI, private mortgage insurance. So that PMI will fluctuate depending on your credit. I've seen it astronomical. If you have poor credit and you put little money down, it's going to destroy the mortgage equation for you. We're going to try to find different arenas, different avenues to take. More than likely go into FHA loan. FHA does not stand for first-time home buyers. It's a federal housing authority, and they do require mortgage insurance for the life of the loan unless you put 10% down, and then it's only for about 11 years. There are lower average interest rates. Higher than average interest rates. I wouldn't go as far as higher than average interest rates. Sorry, again, I need to update this. And then here, you obviously have to have good financial standing to be able to get that interest rate with a conventional loan. But FHA and VA kind of neck and neck. If you have poor credit, they will be higher. You do have some refinance opportunities with a VA loan. There's a VA interest rate reduction refinance. Say that 10 times fast, right? For short, it's called an EARL. The great part about an EARL is we don't need an appraisal. We don't need any kind of credit or anything like that. We literally just take the loan, and process it. And so you don't have to like get reapproved for everything. And we lower the interest rate. It can be done once every 7 months. You have to make 6 payments in order to lower that interest rate, and that's done to prevent those unscrupulous lenders out there from churning their clients over and over and over again and continuously lowering their rate by an eighth or a quarter or an eighth or a quarter and skipping payments. So you have to make 6 payments. Usually that happens on the 7th month, and that's when we're able to refinance them. You can do a cash out refinance. So that's also an option, which is fantastic. So some of the myths that we hear constantly, right? I don't have any credit, so I can't get a VA loan. We have, who was he was in Japan? The kid was like 19 years old.
The same CEO. Oh, no, different time. Yates. His name was Yates.
And he was in Japan. He had no credit history in the United States because he deployed pretty much right when he turned 18. And so we were able to use his cell phone bill. We got a verification of rent in Japanese from his landlord, right? And we had a translator translate it, and then we used like a Netflix bill.
No, he had a subscription to watches.
Yes, watches, the watches, that was awesome. And so we were able to show that he paid his subscriptions on time through watches. So you do not need credit for a VA loan. However, there are adjustments to the interest rates because there is more liability involved when you haven't had enough sufficient credit to establish a history. So you do have a higher interest rate, but you're able to get a loan to buy a condo, to buy a house. Like it's something that you can't really do anywhere else. Can you only have one veteran on the loan at a time? Nope. You can have two. You can split your eligibility. Either one of them can use it, which is pretty convenient. Can I get a VA loan if I'm active duty? Absolutely, 100%. 100%. We do it all the time. No, you don't need great credit, but you do need decent credit. 580, decent, sure. Trying to be nice. VA renovation loans, yes. We can do VA renovation loans. They're now up to, I have to fix that slide to $50,000. They just changed that not too long ago, to do some renos on the house. And that works very similar to an FHA renovation loan where we send out a HUD consultant. They give us the specs that you want to do. They price it out. They give us the invoices. We attach that and we provide that to the appraiser so that when they are appraising the property, they appraise it as if it was already done. So it was able to, we can raise the value of that property based off of those renovations, and we can lend on a higher amount. Can I borrow up to the loan limit? You can borrow higher than the loan limit. You can go all the way up to 2.5 million. There is no more loan limit. There was a couple years back, the Blue Water Act. I want to say it was 2020 or 2021 that eliminated the ceiling on VA loans. But lenders do have their own, just so you know. And can I use it only once? No. You can keep reusing it. You can use it. You can have one and reuse it, as I just showed you guys. But you do need to, if you are going to be buying a much larger house, you either need to come up with a down payment or convert the other home that you have into a conventional loan and reestablish your full entitlement. So it just depends. That question is a little bit harder to answer than being just so straightforward. So I think I have two identical slides here with VA myths. And other than that, I also want to show you guys what it looks like to look up a VA condo, y'all. So keep in mind, you can do condo financing. This is the VA website. If you're gonna look up VA, make sure it's a .gov website and it's not like some .com, like vacondos.com or something like that, right? Down at the bottom of this, VA condos, they have to be approved through the Veterans Administration. Okay. And the beauty of it is once they're approved, they're always approved. So they can't get unapproved like they can with FHA, who like has a finite amount of time when they're approved, and then they have to get reapproved. Does anybody have a condo they want me to look up? Complex? No? All right, cool. Here, I'm just gonna do this and click on Chula Vista. So you can look them up this way, okay, and flip through all these numbers. And here's the complicated part. Sometimes they tell you it's a tract. They don't tell you the name of the HOA that's all pretty on this page, right? Next thing you know, you get to this page and you're like, oh my God, it's a tract, and you can't find it. It's not VA approved. Well, that's why you want to make sure that you contact us and we'll look it up for you. Because the first step to looking this up is to get the legal description off of the property profile, right? First. And then you look it up based off of whatever the legal name of that condominium complex is. And then lastly, if that's not coming up, you want to look at keywords in that condo complex, right? So sometimes, condo, that's not it. So you want to look up the condo name. Like if you have a particular condo name, you know, Breeze, I don't know, I'm just making that up, California, and you want to look up something with the word Breeze in it, okay? Look it up. But mind you, this depends. The person at the VA actually typed it incorrectly because I've had condo complexes misspelled. And we were able to show based off of the address that it was actually that condo complex that they meant to do it. So when you're looking for an approved condo, if you have a veteran looking for a condo, please make sure you reach out to us and that we do our due diligence in making sure that the complex you want to put an offer in is VA approved, because otherwise you're going to be running around with their head chopped off.
And also be mindful that about it's 50-50 that the name in on the Redfin or Zillow or even the MLS is right. A lot of the times they'll have a couple of the keywords right, but it's not the actual name of the complex. So definitely before you go on a listing, before you go searching for any of these complexes for any buyers, hit us up. Let us know. We know the keywords. We know how to use this search engine. We'll make sure it's approved for you guys. And
yeah,
gals.
like Sam, that Bridget's right condo. I mean, that place is VA approved, but you can't get any other financing anywhere else on that condo. But again, because it was VA approved, it's approved. And so if I have a veteran that wants to buy in there, we can still do the financing in there. But there's no way you're getting a conventional loan, I'll tell you that much.
Dana, are you talking about reserves on the complex or reserves for the veteran themselves?
The complex.
What about reserves, Eddie? 10% of monthly income minus debt.
Yeah, I mean, they have to be in solid financial position, but it's with the VA, like if it's approved, they just get insurance. They don't even get a questionnaire. So it's been approved, it's been approved. So the VA doesn't look at the reserves like you do with a conventional loan. That they look at that when they approve the complex.
And
That makes
lately,
sense.
Eddie and I have been in the business of getting condo complexes approved with the VA to ensure that our buyers have the upper leg when it comes to purchasing these. We've ran into two recently that were not VA approved, and we're getting them approved for our vets and then getting them bought with this VA approval. So if you run into a complex that's not VA approved, they say it takes about 6 to 8 weeks. The last one we did took 2. So I'm hoping this one that we have in process right now is about the same. So we'll let you know. But if you got something out there that's not approved, let us know and we'll get it handled.
Yeah, not a problem. We have a list of documentation that we would need from the HOA, and once we get that documentation, we submit it to our condo department. They get directly in touch with the VA, and off we go. And it's usually, like Matt said, pretty decently quick turnaround, especially nowadays. So that's kind of the nuances on condos. I want to show you that as well. Kind of one of these little tips and tricks towards the end here. And that's all I got, you guys. Hopefully That helped you guys get a pretty decent understanding on VA loans and kind of what to look out for and the benefits of them. Any other questions, Joe?
How do they come up with the amount of eligibility that they have? Like, does it have to be how long they've been in service, or what rank are they, or how do they
Yeah.
come up with that?
That's a great
Okay.
question. So everybody has 100%, everybody has eligibility to purchase a home 100%, right? Up front. It's only when you use it does a certain amount of your entitlement go away. Right? It's used up for that particular property. So again, it's one of those things where if you qualify for the monthly payment, you're going to have the eligibility when you're a first-time home buyer, but you still have to qualify for that payment. So just because you can get a $2.5 million loan doesn't mean you're going to get a $22.5 million loan, right? You still have to have the credit, you still have to have the income to substantiate and have the ability to repay the loan. Does that answer your question?
Everybody has the same amount going in. It just depends
Okay.
on if you could qualify for the loan associated with what you're looking for.
Okay, perfect. Got
It's
it.
when you use that loan, and you use it the first time, the second time, if you still have one outstanding, that's a calculation that they do that they give to us with that certificate of eligibility. You saw where I showed you that $86,995. That's their forms. We just pull their forms and they tell us how much of their eligibility that they've used, and then we use those numbers to calculate what they have left.
What about if, for example, they were stationed in another state and they get transferred to San Diego, and then the other property that they're had in the other state, they rent it out? Does that help them? Or
Yes, from a debt to income standpoint, no, from an eligibility standpoint for your VA loan amount. So if you use that VA at some point in the past, that will be on that certificate of eligibility unless you refinance it. So you can refinance it into a conventional loan and then you get 100% eligibility back. But if you have something that's being held against your eligibility, then we're going to have to figure out what you have left. And then you'll just have to come up with a down payment.
got it. Thanks.
Yeah, absolutely.
Yeah, so you could rent out your departing resident to offset your debt, but it doesn't reestablish your eligibility until you refinance out of that VA loan into something else.
Or sell it.
Or so.
Okay.
Good question. Anybody else, you guys?
So
He is
what
a-
happens
he's a
with
puppy.
single family homes? Like if you're the listing agent, do you qualify for VA? How does that work?
No, all single family homes are fine. There's nothing,
Okay.
yeah. The things that you have to look out for, look at, one of the big myths out there, and I gotta add this too, is that like the appraisals are so much stricter with a VA loan. Look at the end of the day, they're looking for health and safety issues, right? So they're looking for a leaning fence. They're looking for a broken handrail. They're looking for severe termite damage where a part of the roof can like come down. Like they want that fixed. They're looking for leaks in pipes that are coming out of the house. They're looking for things that could holes in the wall with exposed wirings. Like they're looking for things that could hurt you. So at the end of the day, like it's a good thing for the buyers. But the sellers, if they want to sell a home like that, they just need to be able to understand, like, hey, these are some of the things. And you want to point that out too when you're walking around, if you're going for a listing appointment and you see wiring just sticking out of the wall, you're like, hey, if we have a veteran making an offer, we're gonna have to patch that wall. Right? We're gonna have to, like, if you have I don't know, an outlet that's like hanging out, right? Like we gotta put that outlet back, screw it back on, right? Like, so it's nothing drastic, but they would probably call it out on any loan. Like if there was something to that extent, right? So does that answer your question?
It's a good reason for you potential listing agents to always have some water heater straps and some carbon monoxide detectors in your trunk.
I don't know about the water
right.
straps, but definitely.
I'm not strapping them in, but
That they're always looking out for those two things for sure.
Yeah.
thank you.
But otherwise they're pretty straightforward appraisals, just like everybody else. It's not like, a conventional doing an appraisal for a conventional loan, you have exposed wiring, they're probably going to say something to you. Cool. Awesome. Great questions. Anybody else with quick questions? Bring it on. Love it. No? I wholeheartedly encourage you guys to help as many veterans as you can. If you have a listing and you get a VA offer, please make sure that you're looking at that like first and foremost, because all these people are putting their lives on the line for us, and that makes such a big difference hopefully it should to you too. It makes a huge difference to me, and whatever I can do to help them, I'm going through and taking my time and making sure that we go above and beyond with every single one of our clients, especially our veterans, the ones that are overseas that are coming back, man, leaving their families behind for so long. Like it's a tough gig, and I respect them to the utmost degree, and so thank you for your service, Rob. Appreciate it, man. And to all the other veterans out there, and anything I could do, if you guys have any questions, VA loans or whatever kind of loans, just don't hesitate to hit us up. Thank you guys for joining us.
Thank you.
There's no more questions.
Have a great week.
You
Thanks, guys.
Have a kick-ass week, y'all.
Thank you. You as well. Bye bye.
All right, talk to you soon. Take care.